Hi guys, Ken Chigbo aka KenFX3 back with another week roundup and look ahead to the key events. Starting off, let's recap last week before we really digest the charts. Obviously, you can see behind me here, the dollar finished in negative territory. And I think we really broke out of a critical range area, like where we're ranging in terms of support, cap to the downside, breaking through that in terms of the bears. Now, why? Why are we seeing this dollar weakness? Because markets just generally are being driven by risk appetite. We're hungry for the riskier currencies, Euro, AUD, NZD, GBP, CAD, generally all outperforming the greenback, which is seen as a safe haven. Now, it's not even just the fact that we're not interested in safe haven right now. It's because there's a lot of risk still remaining around the dollar, whether it's fiscal stimulus, okay, as a theme, or elections. There's key things that are weighing on the dollar right now fundamentally, but then at some point, that's got to revive because there's a lot of risks still in the market, i.e. rising COVID cases again. But for now, we're about risk on. We're hungry for risk. And I expect that to remain the case maybe until this week, final week, and then things may start to change after those elections on the 3rd of November, the following Tuesday. Now, let's just take a look, see what's going on. So I've got the dollar index up here. Just want to show you, see how we cleared this range area? Okay. Support, 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 support. We've finally seen a body closure below that, which does leave the price exposed to this lower zone, at least coming deeper towards testing 92.00 when we look at the dollar index. I didn't mention the specifics as to why we're selling off. Fiscal stimulus optimism, that's something still going to get done, even though the markets continue to get fed, get leading on, like by dangling carrot. Oh, fiscal stimulus, fiscal stimulus, fiscal stimulus. There's no fiscal stimulus right now. They haven't agreed anything. But the optimism's anyway carrying the market through. And then also Joe Biden's, his lead continues to widen in the polls. So he's seen as a more favorable for risk appetite. One, i.e. he's going to come in and spend more. Two, he's not seen as, he's going to come in and potentially maybe better relations with China. Remember, Trump's looking at tariffs. He's the one that sparked a lot of safe haven flows previously when starting this massive trade war with China. So dollar looks exposed anyway to further downside in my view. Broke out a bit of a bear flag there last week. Does look set for a little bit more downside before we continue to the north. Euro being a massive beneficiary, of course. Something to keep an eye on here next week is testing these highs of last week up at around sort of 118.70. If we can break down that region, we'll have room to, as you can see, just looking left here, we'll have room at least to head towards 119.70, close to that 120 mark. Maybe we'll get that pumping before the European Central Bank rate decision that we have on Thursday. Now, for me, man, surely they have to strike a dovish tone. Surely, because of inflation. The last couple of months has been dropping. We're in deflationary territory. ECB, surely you have to do something, right? You've been below your mandated target for 7 years. 7 years. That's a long time. So surely they've got to come in and do something which could be a bit of verbal intervention, perhaps even gear the markets up for some more QE. Pump. Dilute the euro, bring the euro value down. But until then, I think this has got more room to squeeze to the upside, at least. Let's see how we break down those highs. A lot of noise and nonsense still. Something else that's annoying me. When we have these ongoing sagas like Brexit, fiscal stimulus, it's like, man, can we get onto something else now, please? Brexit. Optimism remains. Look, we finished up in positive territory for GU. Look, if you look here, you see how we're struggling around this 130 mark, for the last 3 weeks. We saw it previously back in July. You see how we sort of struggling. And then finally, we were able to get a big breakthrough. Okay, so it's a key area. I think at some point we could end up smashing to the upside. I've got the prices just been consolidating on Friday. Potential bull flag structure here. I would still like to see, just given the way we closed last week, got this wick. I'd like to see that filled this week. So keep an eye on that. In terms of at the moment, guys, on the Brexit front, they are seemingly making some progress. There's one of the key sticking points at the moment is about fisheries. We're talking about fishing in waters. When you really see some of the details of these things that the politicians are arguing about, it's just, man, come on, there's bigger things on in the world. Just, agree something, compromise with each other, a bit of push and pull, and just shake hands and move on. Put your egos to the side, you crazy men. Anyway, some upside still potentially here for GBP. What else am I looking at? I think, really, to be honest, that's it. There isn't much else to note. that I want to break down fundamentally, guys. That's it. Just focus around GBP, all the riskier currencies. You can go and take a look through those. You know, AUD, just as an example. Last week we were hit at one point. Where was it? It was here on Tuesday. We had all this downside because markets started pricing in rate action from the RBA. Some more action because, you know, inflation's low. Growth is still lagging. They want another boost to the economy. So, in the RBA minutes, we had them talking about rate cuts to come and more bond buying. Okay, so essentially to weaken AUD. We did have AUD weakening, but then AUD got carried to the upside, just again on this theme of fiscal stimulus that this is non-existent at the moment, but it's carrying markets to the upside. You know, when we've got these really heavy themes, it's driving your riskier currencies, as I say, AUD, NZD, CAD, even though the fundamentals may not be there for their respective economies, but the theme's just overpowering. So that's carrying that through. At some point, as I say, when this fiscal stimulus and elections are out of the way, things will start normalizing and everyone will be focusing on these individual fundamentals for their respective economies again. Other than that, guys, look, do not hesitate to check out freaknetwork.io, okay? We do run a special community. We're posting daily fundamental and technical analysis, okay? Run by myself, my 11 years experience in the market, so you can check that out. Full details there. And please do not hesitate to get on board with BluFX. It's a great funding solution. No challenges or anything like that. Funding solution which is going to help better you as a trader. If you do prove your worth, you're going to get more funding and you can go on and become a fund manager as well. There's plenty of opportunities with that. It's such a great solution. And if you, with that great discipline, if you build a good track record, you can take that on and go and get investment elsewhere. So yeah, have an amazing week. Thank you. Stay lit. Let's get it.